As today marks the first anniversary of the Lee administration, over the past 12 months, the primary focus has been the economy, marked by a push for an AI-driven tech boom and aggressive fiscal policies. Our business correspondent Kim Do-yeon joins us in the studio to break down the administration's economic scorecard. Welcome back, Do-yeon.
Good to be here.
Do-yeon, the most visible achievement highlighted today is the historic surge of the country's benchmark, KOSPI. Tell us more.
Right. So President Lee's focus on the market was clear from day one, choosing the Korea exchange for his very first outside schedule. The outcome of that directive is a vertical climb for the KOSPI. First, take a listen to what he said.
대한민국 주식시장은 여러분들 아시는 것처럼 너무 불공정하고 불투명하고 다른 나라 사람들이 보면 저 시장을 어떻게 믿냐 이렇게 생각될 정도 아닙니까?
First, he started off with cracking down on any financial crimes or market manipulations. The government warned that things will get tougher, and it started taking off, driven largely by the AI boom and its demand for memory chips. Samsung Electronics and SK Hynix drove the KOSPI up. When the administration assumed office last June, the index stood at the 2,700 level. It is now trading above the 8,500 mark. The government actively engineered this momentum by pivoting toward an ultra-innovation economy. They allocated 10.1 trillion won to build sovereign AI infrastructure, which includes securing 260,000 NVIDIA GPUs to establish the computational foundation for domestic high-tech manufacturing.
Well, this high-tech export boom clearly impacted the broader macroeconomic indicators. But I must say, Do-yeon, the global situation wasn't all that favorable to the administration, right?
That's right. But the unprecedented rise in exports provided the necessary capital to fund massive fiscal interventions. Following the economic contraction from the December 3rd martial law incident, the government passed a 31.8 trillion won supplementary budget to inject liquidity into the market. When the Middle East war erupted in February, they executed another 26.2 trillion won war supplementary budget to cap oil prices.
These policies were clearly deployed to boost domestic demand, and they have been effective in increasing consumption. Such fiscal maneuvering is necessary when there is budgetary room, and right now we are seeing strong tax revenues backing these measures.
On the trade front, Seoul also successfully negotiated down U.S. tariffs from 25% to 15%. And with all this, the Bank of Korea announced that the nation's first quarter economic growth surged to 3.6% on-year basis, with exports hitting a record $219.9 billion.
Well, with the technology and export sectors breaking records and growth rebounding, Do-yeon, what are some of the structural challenges that still need to be overcome?
Well, the most critical challenge is that a severe K-shaped polarization, largely anchored by the contested real estate market. The administration originally encouraged the stock market surge to act as a pressure valve for housing, the force capital out of non-productive real estate. The government refused to extend the tax deferment period for heavy capital gains taxes on multiple homeowners. However, despite these aggressive demand suppression tactics, actual housing prices have not dropped as significantly as government intended. A meaningful price correction requires a massive increases in housing supply, but severe external factors such as soaring global materials inflation and disrupted supply chains have effectively delayed new residential developments.
To meaningfully lower housing prices, two conditions must be met. First, there must be an expectation that future supply will increase, eliminating the scarcity of homes. Second, there must be an alternative market where people can invest their capital.
So while the administration successfully created that alternative investment market through corporate governance reforms, the physical supply of housing remains artificially constrained by outside forces. Now, all eyes are on the government's second half economic strategy and the upcoming July tax reform, which is widely expected to further increase holding taxes for multiple homeowners to sustain this structural overhaul.
Right. Do-yeon, thank you for that thorough report tonight.
My pleasure.